Hello guys, how are you doing? Casper here. I guess you knew that. I just wanted to very brief video where we measure URA in gold terms, Cameco in gold terms, and the uranium spot price in gold terms. It will be like a 5-minute video at max. As you know, in the short term here, the last weekly candle really put a lot of pressure on uranium. So can we see anything different if we measure it against gold? As you know, long term, uranium is going way higher, in my opinion. I think next week we'll decide if that move is postponed for like, I don't know, half a year, 3, 8, 6 months maybe, due to that nasty weekly candle that we just saw. So measuring URA here in gold terms, you can see, remember, it only goes back to 2011. It were higher, in 2008, 2007 or 8, I can't remember. But you can see here, Fukushima there, huge gap in the chart, and the bear market started heavily. Then, in 2016, we actually started to go sideways, more or less, right? And also forming not a textbook, because if it were a textbook, this wouldn't have been above there. So we still treat it as a bottoming pattern. If we had, if it only went there, it would have been lovely across the board, very textbook. And that at that point in time, I would be 100%, well, 90% sure that we are going to reach the target. I still am very confident in the measured move. Basically, the measured move from the head to the neckline gives us 0.052 in ratio. So basically, URA at that point in time will be 1/20th of whatever gold is at that point. So let's say we get there in, depending, you can extrapolate roughly 2026. Where could gold be at that point in time? Potentially 3,500, maybe 4K to the max. So you can also see if that happens, URA will be, 1/20 of wherever gold will be. So let's say, let's make a low number for gold. If this plays out, we divide it by 20. So you will have URA at 150, and we are at 30 now. So again, you can see here that long term, I still fancy uranium a lot. It's really undervalued against a lot of commodities, and also in USD terms, it looks like it wants to go a lot higher. Maybe not, for the next few months here, but again, long term, it looks extremely good here. The fundamentals are extremely strong for uranium, even though we're basically flat for the 2024, and people, personally, yes, it feels like we're down 50% because we have been teased so much, with fake outs and just sideways chop. It's just killing you slowly by 1,000 cuts, right? So URA here against gold looks quite compelling. You can see we have broken out of the long-term golden trend line here. And we are now in a bullish wedge pattern here. Not perfect by any means, but for now, we want this to break to the upside. It will not happen this week nor next week, but again, potentially, we can see a move, September, again, timing-wise, difficult. But for now, it looks good. But obviously, no cigar. The big cigars comes when we start to break, and then we start to get above the neckline, and then we should start to rally, right? So that was the first chart. That was the URA. Now we will take the uranium spot price and divide it by gold. Ratios, I love ratios. We will go to the monthly here. I think it makes more sense. Yeah, sure. Why not? This is also one we look at. We have been looking at a lot here. Same thing again with that big bottoming pattern. Tiny squeeze there, breaking out. The worst we can get is if we test the neckline. For now, we have a lot of support here, a lot of support there. One could argue that this is actually, right, the bottoming, and then we go. So again, if you take wick to wick, it's a bit skewed to the downside, but anyways, uranium spot price, again, will also be what's it called, will be really an outperformer against the gold here, in my opinion. We are in the stage 2, not right now, but we have been for a long time now. We're correcting heavily here. But again, the bottoming pattern seems to be in. We should find support here anywhere between 0.5. We don't have the exact digits over there, but we should see some support here. And then again, we should start to rally. You can see here there's some resistance in this kind of zone here. But overall, I think it looks good. And I think we will close the gap, the Fukushima gap, which is roughly, if I can find the correct tool, it's roughly there. So right now we are at 0.05 to 1. Excuse me, 0.05 in the ratio. I think, again, in 2 years' time, we can actually be at 0.15 compared to whatever gold is at that point in time. We can do the same again. If we take the 3K and we take we multiply that by what's it called? Am I going? What's happening here? Go away. We will do that again. We will definitely do that again. So we'll try 3,000 divided by 100 times 15 roughly. You will actually get really high uranium prices. So I do think we're getting into these ranges here because I think gold will go way higher, and other commodities don't just price itself in USD dollar terms. It also does it in gold terms. So that is a good target again, I think, for 2026 here. Again, that was just, if gold is 4K, it's higher, obviously. If gold is 2K, it's I don't think it's 2K, but you get the idea that I think, the ratio here is turning, and we are going to see it climb, over the next 3 years, 2 years, to these highs here at the Fukushima. Last but not least, we will look at Cameco. Good old Cameco, which has done just extremely well. It's funny that people are negative about Cameco because it has just performed beautifully. It's up 10x, and people are, I don't know. That's a different subject, by the way. Again, we had this long, like 10-year, just very well-defined falling wedge there. Obviously, it blew out to the downside at the March 2020, and it has basically rallied ever since. If we zoom in here, you can actually see that we are in some sort of wedging pattern here, and we're basically sitting at support from that pivot over there, but we also have support all the way down here. So we basically have support between 0.017 and 0.019. So in the short term here, if we don't want to prolong this here, you can actually see we are breaking down last week. That last week's candle was just heavy. So we are kind of breaking down here. Nothing major just yet, but we are losing the initial uptrend. For now, it could be, you can see this blue bull flag here. It has two on the top, two at the bottom. So potentially what we can see is actually just a, like a bull flag, breakdown from the wedge. You enter a new consolidation, and then you enter a new trend. We still have a lot of support, but yeah, it could be again that we are in for a sideways move here in Cameco in relation to gold, where it basically goes sideways. We shall see how it plays out, really. Again, yes, URA, URNM looks very sketchy here short term, and I think we'll find the answer very briefly if we start to rally, or if we will have a prolonged wait or rally in the uranium land. That's all. Short video. It was not 5 minutes. maybe more like 10. But anyways, have a great day, guys. I hope you enjoy this. If as always, guys, hit that thumbs up here on YouTube. Also on Twitter, you can follow me there, and on Substack, which I have had up for like 4 months or so, maybe 4 or 5 months, where we look into details in gold and silver, platinum, oil, trying to do our best to pick the correct sectors and winners. And yeah, join us there in the community if you want to, guys. Have an amazing day. It's been a pleasure as always. Stay safe. Bye.